Hello, everyone. In this lesson, I will cover emerging trends and the future of fintech. The following areas will be covered in this lesson. We first start off by discussing the benefits, practical issues, and ethical concerns with real-time payments and a cashless society. We will describe how blockchain technology is gaining traction in various financial applications beyond digital currencies, and explain how the Internet of Things will shape fintechs going forward. We will also describe how artificial intelligence, AI, and machine learning, ML, are revolutionizing the fintech industry by enabling more accurate risk assessments, personalized financial advice, and efficient fraud detection. And then we also discuss DeFi, decentralization, that's decentralized finance. We'll describe how decentralization could reimagine financial services. And then we wrap up by explaining how the complexity of financial regulatory requirements will lead to the advancement of RegTech, as well as discussing how the future of fintech is increasingly going to be centered on personalization and enhanced customer experience. So we're going to kickstart our discussion of emerging trends and the future of fintech with a look at real-time payments and a cashless society. Starting off with real-time payments, RTP. Now, RTP systems enable instant money transfers between individuals, businesses, and governments, and they enhance efficiency and liquidity. Now, countries like the US have an RTP system called FedNow. India has UPI, and Europe has SEPA Instant. And by so doing, they have already embraced real-time payments, that's RTP. And this has led to faster and more efficient transactions because settlement delays are eliminated once you have real-time payments. There's also greater financial inclusion because it allows for underserved populations to transact easily. There's also improved cash flow management, especially for businesses and gig workers. Now, currently in Canada, there is Lynx, which is a real-time payment system that processes large value time-critical payments. Lynx is owned and operated by Payments Canada. And Payments Canada is also leading work to design a new real-time payment system called the Real-Time Rail, RTR. Now, when it is launched, Canadian consumers and businesses will be able to exchange funds in real time. Turning our attention to the emerging trend of a cashless society, we note that the shift toward a cashless economy is driven by digital payments. So we have mobile wallets like Apple Pay and Google Pay. And then also we have cryptocurrencies driving the shift towards a cashless economy, as well as central bank digital currencies, CBDCs. Now, the benefits of a cashless society include reduced fraud and crime because we have less physical cash available to be stolen. We also have a benefit of more efficient taxation and financial tracking, which also implies easier compliance. And then there's also greater convenience for consumers and businesses because we're going to have a tap and go culture. Now, there are some challenges to consider. There's cybersecurity risks because there's exposure to digital fraud and hacking. There's also financial including gaps. I'm sorry, financial inclusion, I meant to say gaps. Now, not everyone would have access to digital banking, for example. So there will still be some inclusion issues. And the other challenges to consider will be privacy concerns. So for example, governments and corporations could monitor your transactions. And then last but not the least, the resilience of the systems could be a challenge that one needs to consider, all right? So cash obviously would be a backup in case of technology failures. Now, real-time payments and a cashless society are key drivers shaping the future of fintech. But their full adoption will depend on multiple factors, including regulation, infrastructure, and consumer behavior. Let's also note that while real-time payments and digital payments are accelerating, a fully cashless society is unlikely in the near term, as cash still plays a role in many economies. However, the fintech future will be increasingly digital, instant, and data-driven, with real-time payments at the core of financial ecosystems. Let's now discuss the benefits of real-time payments and a cashless society in detail. The first benefit is speed and efficiency. Now, transactions will settle instantly with real-time payments and a cashless society, reducing delays in payments and fund availability, which means that businesses and individuals can access money immediately, improving cash flow. Next benefit we'll look at is convenience and accessibility. Now, digital payments eliminate the need for carrying cash or visiting ATMs. And of course, mobile wallets, online banking, and contactless payments simplify transactions and are convenient. Next, we look at enhanced security. Now, real-time payments and a cashless society reduce the risks associated with handling cash, such as theft and counterfeiting. And then also encryption and authentication methods such as biometrics and two-factor authentication make digital transactions more secure. Next benefit we look at is cost savings. Now, businesses save on costs related to cash handling, storage, and transportation with real-time payments in a cashless society. Consumers can avoid fees associated with cash transactions like ATM withdrawal charges. And now we turn our attention to financial inclusion. Digital payments provide access to financial services for unbanked and underbanked populations. Mobile money solutions allow people without bank accounts to participate in the economy. And finally, as to economic growth and transparency, real-time payments and a cashless society reduce the informal economy by tracking transactions. We're able to track transactions more effectively. And this leads to better tax compliance because we widen the tax net. Governments can efficiently distribute aid, subsidies, and salaries via digital channels. Now, there are a few other benefits one could touch on, such as fraud detection, and of course, fraud reduction and anti-money laundering compliance, and of course, also environmental benefits, interestingly, because real-time payments and a cashless society reduce the need for physical cash production, that's the printing of money and the mining of coins, right? And that lowers the carbon footprints associated with cash transportation and ATM maintenance. We will now discuss practical issues associated with real-time payments and a cashless society. First, cybersecurity risks. Now, real-time payments increase the risk of fraud and cyber attacks since transactions are irreversible. Hackers and scammers can exploit vulnerabilities in digital payment systems. Next, let's look at system failures and downtime. This is a key practical issue because technical outages can disrupt payments, leaving businesses and individuals unable to access their funds. And power or internet failures can also halt transactions, particularly affecting areas with unreliable infrastructure. Next practical issue we'll discuss is exclusion of certain groups. Elderly individuals, low-income populations, and those without internet access may struggle to adapt to real-time payments in a cashless society. People in rural areas with limited banking infrastructure may also face challenges with real-time payments and a cashless society. And let's now look at higher costs for small businesses. This is also a practical issue. Businesses must pay transaction fees to payment processors, increasing their operating costs. And then also some businesses may be forced to raise prices or pass those fees to customers. And finally, we're going to look at cross-border payment challenges. This is a practical issue because different regulations, currencies, and banking systems make international real-time payments more complex. And then you have foreign transaction fees and conversion rates could also create additional barriers. Let's now discuss some ethical concerns associated with real-time payments in a cashless society. First ethical concern is privacy and surveillance. Digital transactions generate vast amounts of data, and this raises concerns about government and corporate surveillance. Consumers may lose financial anonymity compared to cash payments, where one can maintain a higher level of anonymity when you transact with cash. The other ethical concern we'll look at is financial control and manipulation. Governments or financial institutions could freeze accounts or limit access to accounts or access to funds. Social credit systems or financial blacklisting could also restrict people's ability to transact. So these are ethical concerns that one needs to bear in mind. And next is increased financial inequality, because those without bank accounts or digital access could be marginalized, and this could widen the economic divide. And then also digital-only financial systems may deepen financial dependency on banks and fintech firms. The fourth ethical concern we'll be looking at is consumer protections and fraud. Now, real-time payment systems make transactions instant. Let's bear that in mind. And often it's irreversible. So that leads to a higher risk of fraud. Now, victims of scams may find it harder to recover funds compared to traditional banking. And finally, job losses in cash-related sectors. So for example, cashiers, security personnel, and ATM-related jobs could decline, affecting employment rates. And traditional banking roles may become obsolete due to automation and digital payments. So let's continue our discussion of emerging trends and the future of fintech with a look at the Internet of Things, IoT. So IoT is basically a network of interconnected physical devices that communicate and exchange data over the internet, right? So these devices are able to do that, that is the communication, because they are embedded with sensors, software, and other technologies. And this enables the collection and sharing of data, and this helps to automate processes, improve efficiency, and enhance decision making. Now, the Internet of Things, IoT, is expected to significantly shape the future of fintech by enhancing efficiency, security, and personalization in financial services. And here are some ways that IoT would pretty much be able to significantly shape the future of fintech. Number one, by using real-time data for financial insights that are better. And this is because IoT enables financial institutions to collect and analyze real-time data from the connected devices. And this leads to more accurate risk assessments, personalized financial recommendations, and improved customer service. Now, another way through which IoT would significantly shape the future of fintech is through enhanced security and fraud prevention. Now, with IoT-powered biometric authentication, such as with smartwatches with fingerprint and facial recognition, fintech companies can enhance security. And IoT devices can also detect unusual spending patterns and trigger instant alerts to prevent fraud. Next, we'll look at smart payments and contactless transactions. Now, IoT will drive frictionless payments through smart devices like the wearables and, for example, smart cars and home assistants. And so, for example, when you have connected vehicles, those could handle tolls, fuel payments, and insurance transactions all automatically. And next, IoT-based insurance. So this is within the sub-fintech sector of insurtech. So insurance companies can use IoT sensors in homes, cars, and wearables to offer dynamic pricing based on actual risk levels. So for example, telematics devices in cars help insurers to price policies based on actual driving behavior. Next, we look at supply chain and trade finance automation. And this is one area also that IoT could significantly shape the future of fintech. And this can be achieved because IoT connected sensors in supply chains can provide real-time tracking of goods, enabling automated payments in trade finance when contractual conditions are met. For example, when shipment is received and we verify the quality. Continuing our discussion of IoT, IoT will significantly shape the future of fintech by personalized banking and smart branches. So banks can use IoT to create smart branches with automated services, while wearables and voice assistants can provide AI-driven financial advice based on a customer's spending habits and lifestyle. Next, we look at blockchain and IoT integration. So IoT can work with blockchain to secure financial transactions, especially in decentralized finance, that's DeFi. Smart contracts can automatically execute payments when IoT sensors confirm the predefined conditions that trigger the smart contract to automatically execute. And finally, IoT can significantly shape the future of fintech through predictive analytics for credit and lending. Now, lenders can use IoT data such as from smart homes, connected vehicles, or wearable health trackers to assess borrowers' financial health and offer more tailored lending solutions. So, summarizing all these areas through which IoT can significantly shape the future of fintech, one can say that IoT is making fintech smarter, more secure, and more efficient by enabling real-time data processing and automation. Now, as IoT adoption grows, fintech companies that integrate it effectively will gain a competitive advantage in providing seamless and intelligent financial solutions. Let's now look at how artificial intelligence and machine learning will be shaping the future of fintech. Now, AI and machine learning are revolutionizing the financial technology industry by enhancing efficiency, security, and customer experience. AI and machine learning will shape the future of fintech by, number one, enhanced fraud detection and risk management. So, for example, AI-powered fraud detection systems can analyze vast amounts of transaction data in real time to identify suspicious activities and prevent financial fraud. Machine learning models can assess credit risk more accurately by analyzing non-traditional data sources, thereby improving lending decisions. Now, in the area of personalized financial services, AI-driven chatbots and virtual assistants can provide real-time financial advice, budgeting insights, and personalized recommendations. And machine learning algorithms can analyze customer behavior to offer tailored investment strategies, thereby helping users make informed financial decisions. Now, in the area of automated trading and wealth management, AI-powered robo-advisors manage investments by analyzing market trends and making data-driven portfolio adjustments. And we expect to see this increasingly in the future. And then you can also have algorithmic trading systems leveraging AI to execute high-speed trades, thereby optimizing returns for investors. Now, in the area of smarter lending and credit scoring, AI can improve credit scoring models by evaluating alternative data like social media activity, payment history, and spending habits. Now, this enables financial institutions to provide loans to a broader range of customers, including those with little or no credit history. And continuing, the fifth area through which AI and ML can impact the future of fintech is in the area of regulatory compliance and anti-money laundering, AML. Now, AI can streamline regulatory compliance by automating audits, monitoring transactions for money laundering violations, and flagging anomalies. Now, regulatory technology, RegTech, which is a subsector of fintech, can be powered by AI to reduce compliance costs and improve transparency. And we expect to see this trend increasingly in the future. Continuing our discussion of how AI and machine learning will shape the future of fintech, we look at blockchain and AI integration. Now, AI enhances blockchain technology by improving fraud detection in cryptocurrency transactions, and also optimizing smart contract execution. Also bear in mind that DeFi, that's decentralized finance platforms, leverage AI for risk assessment and automated lending protocols. Now, in the areas of customer experience and support, AI will shape the future of fintech based on AI-driven chatbots, providing 24/7 customer support increasingly, and reducing response time and enhancing user satisfaction. We also should increasingly see sentiment analysis, which will help financial institutions to understand customer feedback and improve service offerings. Now, the eighth area we will look at is predictive analytics for market insights. Now, AI will shape the future of fintechs by helping fintech firms predict market trends through the analysis of historical data and external factors like economic indicators and news sentiment. Now, businesses can also use these insights to make strategic financial decisions. Now, in the areas of cost reduction and operational efficiency, AI can automate repetitive tasks such as document verification, data entry, and reconciliation, and the reduction of operational costs. So bearing in mind that, again, AI can automate repetitive tasks such as document verification, data entry, and reconciliation, there's going to be a reduction in operational costs for many organizations. And also, let's bear in mind that intelligent automation enhances efficiency by minimizing human errors and improving workflow management. And finally, AI and machine learning will shape the future of fintech in the areas of cybersecurity and data protection. And specifically, AI-powered security systems can detect and mitigate cyber threats by analyzing network behavior and identifying vulnerabilities. And machine learning-based encryption techniques can enhance data protection, thereby ensuring secure financial transactions. Let's now look at future trends for regulatory technology, that is, RegTech. Now, the increasing complexity of financial regulatory requirements is a major driver of advancements in regulatory technology, that's RegTech. RegTech solutions are increasingly becoming essential for managing compliance, reducing costs, and minimizing the risk of non-compliance. Now, we expect to see an increasing trend of regulatory technology helping organizations to adapt to dynamic regulations. So regulations are continuously evolving with changes in areas like anti-money laundering, know your customer, and data privacy. And RegTech solutions can use natural language processing, for example, and regulatory change management tools to track and implement updates efficiently. Now, as to automation of compliance processes, we also expect to see an increasing trend of RegTech solutions helping organizations to automate their compliance processes. And with regulations becoming more intricate and voluminous, financial institutions must process vast amounts of data to remain compliant. And RegTech solutions will leverage AI, machine learning, and automation to streamline compliance tasks. And this will reduce manual labor and improve accuracy. As to the area of cross-border compliance, Global financial institutions must comply with multiple regulatory frameworks across different jurisdictions, and RegTech solutions increasingly will offer standardized, scalable compliance tools that can help global financial institutions to navigate these international requirements seamlessly. Let's now discuss how personalization and customer experience considerations will impact the future of fintech. Now, personalization and customer experience is expected to drive customer loyalty and engagement. And by leveraging data analytics and AI, fintech companies can offer tailored financial products and services that meet the unique needs and preferences of each customer. And we expect to see an increasing trend in this area of personalization and customer experience. Let's now turn our attention to the future of blockchain technology within the context of fintechs. Now, blockchain technology is rapidly expanding beyond its original use in digital currencies like Bitcoin. Its decentralized, transparent, and secure nature has made it an attractive solution for various financial applications. The first financial application of blockchain we will discuss within the context of the future of blockchain is central bank digital currencies. Governments and central banks are exploring blockchain for issuing digital currencies, which are referred to as central bank digital currencies. So, for example, we have China's digital yuan and the European Central Bank's digital euro. Now, these digital currencies aim to modernize payment systems and improve financial inclusion. Let's now discuss the application of blockchain in insurance and risk management. Now, insurance companies can use blockchain to automate claims processing and reduce fraud. A key blockchain application is the smart contract, which ensures that claims are verified and paid out efficiently based on predefined conditions, which eliminates the need for manual processing. Now, in the area of identity verification and compliance, financial institutions can use blockchain for KYC and anti-money laundering compliance. Blockchain-based identity management systems can allow secure and reusable verification of users, reducing compliance costs and improving security. The next application of blockchain technology we'll look at is smart contracts and automated transactions. So smart contracts are self-executing agreements with predefined rules. And these allow businesses to automate processes without any intermediaries. They are widely used in loan issuance, insurance claims processing, and supply chain finance. And next, we look at cross-border payments and remittances. So blockchain can reduce the cost and time required for cross-border transactions. Now, traditional payment systems involve multiple intermediaries, leading to delays and high fees. Blockchain, on the other hand, enables near instantaneous transactions with lower fees. And Ripple and Stellar are examples of blockchain-based platforms that facilitate international remittances. We will now discuss how decentralized finance, that's DeFi, will shape the future of fintechs. DeFi platforms leverage blockchain to offer financial services like lending, borrowing, and yield farming without traditional banks. So we have platforms like Compound and Uniswap, which provide users with peer-to-peer financial transactions while maintaining transparency and security. Continuing our discussion of how decentralized finance will shape the future of fintechs, it is expected that decentralized financial platforms will see an increase in its use as they operate on transparent and immutable ledgers, that's the blockchains, and reduce the risk of fraud and corruption. And also, decentralized networks are more resilient because they are distributed across multiple nodes, which reduces a single point of failure. Let's now discuss how quantum computing is expected to shape the future of fintech. Quantum computing has the potential to revolutionize the fintech industry. It's a new type of computing that uses the principles of quantum mechanics to process information in a fundamentally different way from traditional computers. Now, classical computers process information in bits. So the classical computers are the computers we are familiar with, right? They process information in bits, which can either be 0 or 1. Quantum computers, on the other hand, use quantum bits, that's qubits, which can be 0, 1, or both at the same time, thanks to a quantum property called superposition. Now, quantum algorithms use interference to amplify the probability of correct answers and cancel out wrong answers. Now, because of these properties, quantum computers could solve certain problems much faster than classical computers, that's the standard computers we know. And they are especially useful in cryptography, that's encryption, breaking or creating secure codes. They are also very useful in drug discovery and in complex simulations, like in the areas of molecules or physics systems. They are also very useful in optimization problems. But let's be mindful, let's bear in mind that quantum computing is still in its early stages, but it has the potential to revolutionize the fintech industry by solving complex financial problems at unprecedented speeds. While still in its early stages, quantum computing could enable breakthroughs in areas such as risk management, portfolio optimization, and cryptographic security. Other future trends in the fintech sector worth mentioning is the adoption of open banking and advancements in cybersecurity. Now, as to the adoption of open banking initiatives, which require financial institutions to share customer data with third-party providers, of course, with the customer's consent, are gaining momentum globally. This trend is expected to foster innovation and competition, leading to better financial products and services for consumers. Now, as to advancements in cybersecurity, as fintech solutions become more prevalent, the importance of robust security, and I mean cybersecurity measures, cannot be overstated. Future fintech innovations will likely focus on enhancing security protocols to protect sensitive financial data and to prevent cyber threats. So in conclusion, we can say that the fintech industry stands at the forefront of a financial revolution driven by technological advancements, changing consumer expectations, and a supportive regulatory environment. Now, as we explore the emerging trends and the future of fintech, it is clear that the possibilities are vast and the potential for innovation is limitless. So this brings us to the end of the lesson on the emerging trends and the future of fintech. I do hope you enjoyed this lesson, and I look forward to you joining me as I cover other fintech topics in other lessons.